Hello, accounting superstars. This is Professor Don Bush. I've been a professor for about 30 years, CPA for about that long, and I've got great ways to explain accounting, so welcome aboard. Well, today's lesson is about basic payroll accounting. So this lesson is meant for students who are in their first semester of accounting, probably getting towards the end of the semester and learning a little bit about payroll. And payroll can be a lot of fun. I like doing it. But one thing about payroll is you got to be careful. It's got to be done right. I'll tell you what, the government gets really upset if it's not done right and you don't pay in the proper amount of taxes. Also, employees get pretty upset too if you mess up on the payroll. But, with that in mind, it's still kind of fun to do. Hey, by the way, I've got a webpage, accountingsuperstars.com, and I've got all my videos listed by topic. So if you're looking for a specific topic, there you go, accountingsuperstars.com. I live in Colorado, up in the mountains at about 8,500 feet. And the last couple of weeks, we've had a lot of snow. And I have to tell you, I'm a little tired of the snow. I had to shovel my way out to the wood pile so we could heat our house here with our wood stove. And I'm ready for summer, I'll tell you what. But today's really nice. It's about, I would say, 45 degrees, and tomorrow's going to be even nicer. So I'm looking forward to that. So what we've got going here with this payroll accounting, we've got Susie. Susie works for Fred's Snowblower Service. And Susie worked 20 hours and she gets paid $20 an hour. So the first thing that we have to do is figure out Susie's gross pay, her earnings for the week. And if you go 20 hours times $20 an hour, you get $400. So Susie earned $400. Now, Susie has a lot of things withheld out of her paycheck. Oh boy, all kinds of taxes, and then a couple of other things too. So let's go over them here. So Susie has federal income tax withheld, and that is taken off of a table, more or less. I know it's done mostly with computers these days, but let's just say that Susie has $30 withheld for federal income tax. State income tax, kind of the same thing. It can come off of a table or it could be a percentage of the federal. Now, Social Security tax, that's a percentage of the wages. And it's about 6%, so I'm using 6%. So 6% of what? Well, 6% of $400. I think, if I recall, it's 6.2%, but we'll just round it to 6%. Medicare tax, well, it's about 1.5%. And so 1.5% of what? Well, 1.5% of $400. So it comes out to 6. And by the way, I'm rounding all these numbers. I'm rounding it to the nearest dollar. You don't want to do that when you're doing payroll. The pennies count, and the IRS, they want every penny. Believe me, they want every penny. It is, just to tell you a little story, I'm not sure how the payroll forms are done these days, but back in the day, what you had to do was figure out the withholdings. You figured it out one way, and then you figured it out a second way, essentially. And whichever one gave the higher amount of pennies, that was the way you had to do it. It was kind of a weird form. And who knows, maybe it's still done that way. But anyways, the pennies are important, but I'm just rounding it just so that, just to keep it easy. So 401k savings account. Now, Susie is smart. She's having some money withheld with each paycheck, and it's going into her 401k, which is really great. So $10. And then medical insurance. So Fred, at Fred's Snowblower Service, he provides medical insurance, but the employees pitch in a little bit too. And so Susie is pitching in $20 for the medical insurance, and Susie also is giving money to a not-for-profit. And sometimes companies do this. And in this case here, it's the Denver Museum contribution. So Susie has a little bit of money withheld for the Denver Museum, and Fred just forwards it on to the museum. So there you go, $5. Now, all you would do is get the grand total. There you are, $100. Now, coming down here, all we have to do is figure out Susie's net pay. Pretty easy. Well, her gross earnings are $400. She's having a grand total of $100 withheld for various things. And so her net pay is $300. Easy. All right. Now the journal entry to do this for Susie is super easy. I'm going to split the screen here so we can see two things at once. Here we go. So coming on down. So here's how it works, folks. We will debit wages expense. And this is going to be the gross amount of the earnings. And the gross amount is $400. So there you go. So this journal entry, it looks really big and scary, but it's really not. It's really easy. And again, pennies are important, folks. Don't forget those pennies. And I know I'm ignoring the pennies here today. So here's what we're going to do. We're going to credit federal income tax payable. Now that word payable means it's a liability. And this money must be forwarded to the government. And the government's got all these complex rules on when it needs to be forwarded. So federal income tax payable, $30. We just get it off of the withholdings here. State income tax, same thing. It'll be state income tax payable. And I'll tell you what, it is a payable. It is a liability, and the IRS gets so upset if you don't pay this liability. And I can't even begin to tell you how upset. Social Security tax payable, $24. And Medicare tax payable, here we go. And that's a grand total of $6. 401k savings account payable, because Fred needs to forward this to the 401k, to the 401k program. So it's a payable. $10. Here we go. Let's see here. Medical insurance payable. This money needs to be forwarded to the insurance company. And Denver Museum contribution payable, right? They're all payables, every single one of them, because they're liabilities. And they become liabilities on the day of that the payroll happens. So the day Susie gets paid, they become liabilities. All right. So what is Susie's net pay? $300. And let's just say that she gets paid in cash. All right. Maybe they just cut her a check. So there you go for $300. So actually, even though this is a giant journal entry, it's really quite easy. Now that's not the end of it, folks. There is another half to this. Payroll entries always come in twos. Always. Now, not only does Susie have a lot of things withheld out of her paycheck, but Fred must pay a lot of taxes also over and above. So again, remember that Susie's net pay, or I'm sorry, not her net pay, but her gross pay is $400. Susie's gross pay is $400. So these tax withholdings are going to be based on the $400. Social Security tax, well, Fred has to match it. So 6% of Susie's gross pay, $24. Medicare tax, got to match that also, 1.5%, $6. So that would be the exact same amounts that Susie had withheld out of her pay. Now here are a couple new taxes, FUTA tax and SUTA tax. FUTA tax, 0.8%. It's not really big, but what FUTA stands for is the Federal Unemployment Tax Act. And so this is in case Susie were to become unemployed, that she could file for unemployment and maybe get some weekly payments. So it's 0.8%, and this is the federal income tax. So all you do is take Susie's gross pay, $400, multiply it by 0.8%, and it comes out to $3. So it's not a lot. And there are some limitations to this tax also, but I won't go into it now because it's a little more advanced than what we need right now. SUTA tax, that stands for the State Unemployment Tax Act. And usually the State Unemployment Tax Act is bigger than the Federal Unemployment Tax Act. So for state, 2%. So 2% of Susie's gross earnings is $8. There you go. Now, Fred also does some matching. Fred also helps pay for the medical insurance. So Fred pays in $20. for medical insurance, and then 401k matching also, which is great. So Fred's going to match that. So these are the taxes and the matching that Fred is going to do. So what are the total amount of matching here going on? What is the total amount? $71. Here we go. So here's the second entry, and I've got to split the screen once again. All right, well, here's the journal entry that Fred will need to do. Well, the grand total of payroll taxes and matching that Fred is going to do is $71. So what we'll do, we'll put right here in the journal entry, $71. There we go. And what we're going to do is we're going to call this payroll tax and matching expense. Certainly payroll tax expense. And I made up the matching expense just so it made sense. Payroll tax and matching expense. All right. So Social Security tax payable. There we go, $24. All I'm doing is taking it from right up here. Medicare tax payable. Do you notice the pattern here? All these payables. FUTA tax payable, Federal Unemployment Tax Act. Usually not a lot. SUTA tax payable. Usually that's more than FUTA. And the matching. Medical insurance payable. Here we go. And finally, 401k savings account payable. These are all payables. Now, we're not crediting cash here or debiting cash, or cash is not involved at this point. Now, Fred, within the next couple of days, he's going to have to forward this money to the appropriate places. But these just add to the liabilities. So, ladies and gentlemen, there you go. There's your first introduction to payroll accounting. It's really not too bad. If you remember, it comes in two halves, two parts. One part is what's being withheld out of Susie's paycheck. So here you go. And you're crediting cash for the amount of net pay. So that's half of it right there. And then the second half, this is what Fred has got to pay. So there we go. So there's the journal entry. Comes in two parts. So hope you enjoyed this video, folks. And if you did, let me know. Hit that subscribe button, hit the like button. Let me know that you appreciate these videos, and I'll make more. And I want to thank all the people that are subscribing. I really appreciate it. Thanks a lot to you guys. So until next time, over and out.